Looking for the reasons for the Walmart apocalypse? In this video, we'll tell you the reasons why Walmart is falling apart before our eyes. Just make sure to watch the full video. Despite its popularity, Walmart is no longer the popular retailer it once was and is showing the same cracks as Kmart and Sears. As a result, Walmart shares made an incredible investment for shareholders over the past 5 decades. However, Walmart's business is beginning to suffer from major holes as it loses its cachet with consumers. It is interesting to note that Walmart has kept its financial difficulties from the headlines because global challenges are different, masking them in the larger picture. In reality, this may be the latest in a long line of leading retailers to go from boom to bust in a blink of an eye by digging beneath the headlines. In this video, we'll tell you that Walmart's empire is slowly falling as the United States enters a new recession. If you're the biggest retailer in the world, even a 1% drop can result in billions of dollars in losses. The past year has seen profits drop 25%, which is a sign that the problems of big box retailers are worse than anyone could have imagined. Walmart was the business rival that most people have feared for decades. New data suggests that Walmart is losing ground. Walmart is losing trust from consumers and has significant revenue streams. There has been little news coverage of Walmart's financial troubles. Superstore chains can blend in with the background of other parts of the world. The worst news is out. Walmart's problems don't seem as severe as its profits. Walmart spent $3.8 billion in the third quarter rather than cashing from operations. Walmart's third quarter free cash flow was $7.3 billion after accounting for capital expenditures of $3.5 billion. S&P Global Market Intelligence historical data shows that Walmart has not experienced negative cash flow in the third quarter since 1995. It was more than 25 years ago. Walmart may be experiencing additional financial losses. According to the IBD stock checkup, earnings have fallen by 4.5% in the last 3 quarters. Investors desire 25% growth. The retail chain has seen its monthly sales increase by 10% on average over the last 3 years. Its projected revenue growth of 4% in the fourth quarter 2022 seems disappointing. Investors are currently not advised to buy Walmart stock. Both domestically and internationally, the traditional Walmart business model continues to show signs of weakness. Let's suppose that Walmart fails to adapt to changes in market trends. Walmart could fall to e-commerce rivals and be plunged into the same downward spiral as other stores in recent times. The relentless retail apocalypse that is sweeping the country could see Walmart, the largest retailer in the region, succumb. It is still uncertain. It is uncertain what the future holds. After a losing streak, the retailer's latest earnings report revealed that it suffered substantial losses. A company's failure is not a sign of trouble. Walmart, American customers, and the entire economy are only at the beginning of their declines. Travis Huam, Motley Fool's Travis Huam, observed that if you look between the lines, we can quickly identify companies in serious financial trouble and speculate that they could be the latest of a long list of prominent merchants who go bankrupt in a blink of an eye. Since Walmart's greatest days, we have accumulated a lot of statistics and figures to support this claim. Both domestically and internationally, Walmart's old supercenter model is in serious trouble. Suppose the retail giant can't adapt to the new competition, such as online specialty and local merchants. In that case, there's a chance it will fall into the same downward spiral that so many other businesses have entered. Even though there are efforts to bring small stores closer to customers' homes, it would be a giant leap for a company that has been operating in the same way for decades. Many large merchants are unable to adapt to changing consumer buying habits. You may not shop at the same stores your grandparents used 50 years ago. Walmart will likely lose money over the long term due to the mentioned issues. Walmart's future performance is uncertain. Returns are decreasing, Walmart has trouble overseas, and American shoppers are shopping elsewhere. While Walmart can turn the tide, time will tell. However, if Walmart continues to struggle, we would steer clear of the stock and may even consider shorting shares. The decline in same-store sales in America is the most alarming figure. A healthy retailer will strive to increase same-store sales faster than consumer spending grows. It shows a more significant market share locally. This statistic shows how different locations affect sales. Despite overall sales increasing due to increased stores, same-store sales will decrease. It will result in lower returns for each store. Walmart's issues are much more complex than the retail industry's ups, downs, and the state of the economy. Walmart's old strategies of attracting customers by offering one-stop shopping and low pricing worked well, but the current consumer trends threaten those strategies. It may be easier for consumers with tight budgets to shop online at lower prices. However, wealthier customers will prefer quality products over one-stop shopping. It is evident in the growth of specialty shops such as Williams-Sonoma or Lululemon and online merchants like Amazon.com. Walmart downfall most alarming evidence comes directly from the retailer. Walmart calculates every year its return on investment to investors. It shows how much it earns from its stores and inventory. Walmart could soon lose its profitability if the ROI keeps falling. Montgomery Ward and Kmart were retail icons. However, their competitors eventually overtook them due in part to declining same-store sales and declining returns. These tendencies can't continue for long, and it's time to act. Walmart's traditional supercenter business model is suffering both domestically and internationally. There is a real possibility the retail giant is in danger of heading down a downward spiral. We've seen so many retailers go down before if they can't adapt to the new competition like online, specialty, and local retailers. It's been decades since the company operated one way, so introducing smaller footprint stores closer to the consumers is a stretch. One reason you don't shop at the same stores your grandparents did 50 years ago is that major retailers have trouble adapting to changes in the way consumers buy products. Considering the above-mentioned challenges, we believe Walmart will be a long-term loser. It's a tough time for Walmart overseas. Consumers are shopping elsewhere, and new formats might not be successful. If Walmart didn't turn around, we would stay away and even consider shorting shares if operations aren't improving.